Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 19th of July. All right, now we had a little bit of head snap, fake snap, false move, whatever you want to call it, on a few of the majors. Now we did see following the Fed. Let me just get that a little bit thicker. Really strong dollar bias following on from Jerome Powell, sort of talking about future rate hikes. We're not worried about trade situations, all this sort of stuff. So we did see a lot of these currencies. The Kiwi never broke out through any ranges, but Sterling, Aussie, and Euro did. Also, stronger dollar. We saw dollar CAD scream at the top side, and dollar yen just mosey on its way, slightly higher, a bit of sideways, but still moseying on higher. Now, what was causing all the kerfuffle? Well, there's a couple of things. Jerome Powell was sort of still talking, but when you come back to look at the key events, now this is where some of these, well, I guess I call them peripheral events. You look at the building permits, okay, and the housing start numbers. Now, in different times, these numbers have a different higher or medium impacting profile. The housing starts obviously around the subprime crisis was huge, anything to do with housing. But what we had a situation is we had some significant variance in these numbers. Now, I would probably call these second tier numbers, if anything, but check out the building permits was down, but the key one there, housing start numbers, a lot of variance there. Even the revision was slightly weaker. So what you had is a situation where the dollar, US dollar, which had really enjoyed the speech from Powell, did slip back below that resistance line it broke earlier, just under 95, sort of 20 there. So with that was the main catalyst for a lot of these moves on the majors. So you come back and have a look at the main trigger point here. You've got all of these currencies which were going along quite well, retracing perfectly. And I actually had a nice sell order here in the Aussie. I was pretty confident this would be lower. Those economic numbers was enough to really break the camel's back, and we saw Aussie and Euro, two pairs that I liked to the downside, sort of just cruise up, and it nullified a bit of what Powell was speaking the day before. All right, so that's and for that matter, we had UK CPI figures which were terrible. It's put an underlying sort of weak tone on the US dollar and led the sterling back to rallying back towards 131. Now, I was short sterling. I've taken that off the table because it looks like, if anything, it could easily go back towards 131.20. Right, and this is where you sort of bring in, like, okay, that's what happened yesterday. So we had some weak US numbers. We've lost that initial buy, short-term momentum in the US dollar. So what we have a situation is we have the major pairs. If anything, you're just correcting your trend lines. And that's it. There's no sort of overthinking to be done here. Now, this trend line here from the low point, it is the only sort of hourly one we have around. Now, you're just adjusting it to the new low, right? And that's, gives us an entry miles back to where it was. Now, if I go back to the dailies here, you're sort of looking for the levels, the big levels underneath all these things. And as you can see, there's one here, right? So if I just come down here, go on your dailies. Okay, that's the real important support level. This other one's only got sort of, it's a bit short term, but it is the only one we've got. So you come back to the hourlies. I sort of blow that up a touch. Now I get a bit of a picture here of what's going on in the Aussie. It's back in the range, right? Kiwi never broke outside the range. Euro is a little bit easier to update because the previous low that we had was just along there in July 13. So we've got basically Euro back into the range there as well. Sterling hasn't broken back above here yet, so I'm still going to leave that line there because it will act as resistance. If anything, you can see how that previous resistance line is acting as support for dollar CAD. But what we are looking for is a little bit better. I see there's any other levels here. Let me just come across. I'm trying to go back as far as I can. You always do just to get the right level. So if anything, that's probably your first support line, and then you've got another one below that around 130.88. But this level here at the moment is acting as support. If anything, you've got a new resistance level on the top side there with that new high. You're probably whacking that in there as well. And generally what I do, I like to make this different because I know it's an old line that is now acting still there. So I just changed the color. So I know it's not significant. It is the previous resistance, which is now going to act as support. and I've got my level there, and basically all my charts are done. Okay, that's how quick it should take you to get your levels up. Now, one of the key things from here is really piecing together. Okay, what am I looking at today? Well, we've got trend lines here. We've got Aussie, Kiwi, everything's back in the range. Well, the key opportunities today and going forward for the remainder of the week, you'll find on the upcoming events. Now, these, there's no secret what they are. We've got Aussie employment numbers, okay, UK retail sales. That's the only two key releases we have for Thursday. And then you come into Friday, it's even a little bit thinner, right? We've got Canadian CPI data, all right? So that's the key thing. So when you see the upcoming events like this, particularly, say, the Asian session, Aussie employment, and then, say, the European session, the UK retail sales, you come back to your charts and simply concentrate on those numbers. These are the currency pairs which will be most active. So I'll be looking very closely at the Aussie dollar. Okay, it is back in the range. The market got itself short and was very excited about a move to the top side, me included. I got the first part of it, sold back up here, and those weak US numbers took me out. But today's numbers give us a new chance, right? So the Aussie employment numbers, definitely a good opportunity. And then once we come into that UK European session, you're looking at sterling. Now, the pressure's on the downside in sterling. I still like sterling lower. Tell you what, weak retail sales figures will go a long way to turning this thing around. At the same time, if those numbers come out strong, we could see a pop towards 131.20 if those numbers are strong. So it's pretty much in the balance. If anything, the overall bias for sterling is down. So the best trading opportunity is weak UK retail sales figures. Whereas the Aussie, it's probably got a little bit of a chance, potentially both ways. I'm still going with strong dollar, even though we had those housing numbers which were a little bit weaker. So they're just giving you a bit of an extra look here. So have a look. We've just had some Japanese numbers come out, some trade balance figures. I wouldn't be getting hugely carried away on these numbers, but just have a look. I think the Nikkei was due to open up 50 points up. We've got weak numbers here on imports, strong exports. That's a pretty good result for the trade balance. That should see the Nikkei rally. And then, as I said, you've got the Aussie data, employment number, unemployment rate. And then, once again, coming into the UK, it's been a massive week for sterling. We've still got some Brexit issues on the sidelines, but keep an eye on these retail sales figures. They are dynamite. All right, so you're going to expect huge volatility. There was yesterday on the CPI numbers. So just be aware, if you are trading, wait for retracements, wait for it to clear up before you jump in. Otherwise, you're going to get chopped to bits as the data comes through. And that's the last thing you need is getting smashed on a crazy release. Now, let me just come back and just give you one last look at the key numbers here, or the key news that's going around. Dollar pairs gains as investors cash in on boost from Fed's Powell. Well, that's rubbish. It's just they do write stuff just to sort of write things to generate traffic. Now, the real cause of the relief rally was those housing numbers. You got your sterling, Brexit, inflation figures really weak. And then you've also got Trump. Here he is over here, still creating issues wherever he goes. I mean, he's got to be getting a little bit sick and tired of all this. I know I am. I wish he'd just either sort of tear up all the trade agreements and we can get on with it, because it's still a little bit murky there. And that's why when we come back to the market, the MyFX Trading Hub, the main trading conditions here are still a little bit cloudy. These aren't ideal conditions by any stretch. We had a little bit of sporadic US dollar strength, but still we've got Trump and a number of issues still dragging on. Keep an eye on the employment numbers today out of Australia, UK retail sales. These are the two major events that you want to be focusing on, and the currency pairs related to those two currencies. All right, that's where the action is going to be. All right, guys, we'll catch you in the trade zone. Have a great trading day. Cheerio.